Hey, how's it going, everybody? Mike Weber here, your Los Angeles real estate broker and consultant, here with your real estate market update for the beginning of October 2019 for the Los Angeles County and South Bay Beach Cities areas. So we've seen a kind of an uptick in the market in general. Prices have showed some modest gains when we look at year-over-year figures for the end of September, the beginning of October. Certainly as a result of the lower interest rates that have been pervasive in the market, as well as additional funding options for different types of buyers, low down payment, type loans, low doc loans, all kinds of creative stuff is flooding the market currently, trying to help buyers get into homes that they otherwise wouldn't have been able to get into. But let's go ahead and get started. We're going to start out a little different and just compare a few of the counties in Southern California, Los Angeles County, Orange County, San Diego County, and Ventura County, and just take a look at what's happening with median prices. Now, Los Angeles County is definitely leading the pack with a 4.1% gain year over year. If we look at Orange County, they're down about 2% year over year. San Diego County is up just 0.4% year over year, and Ventura County is down 1.6 year over year. San Bernardino County is up rather substantially. So across the board, I mean, some of the counties are losing a little bit, and San Bernardino County and Los Angeles County are doing okay. Of course, Los Angeles is fairly modest at 4.1%, just beating out the rate of inflation by maybe 2 percentage points or so. But definitely a pickup compared to what we've seen over the last 3 or 4 months in terms of median price growth for Los Angeles. And we will see the same thing when we get to the South Bay as well. So now let's take a look and see what's happening with the supply of inventory in Los Angeles. And what we're seeing is kind of just a flattening out. I mean, really rates started to fall towards the end of last year. And interestingly enough, as you see the pattern here, I mean, it's been relatively flat in terms of the amount of inventory on the market since that time, which means the low rates are certainly helping buyers absorb that inventory that was growing, all throughout 2018 and looked like it was just going to really take off. But as the rates started to fall, a lot of that inventory has been being taken off the market. And so now we've just been kind of hovering right at this, 3.2, 3.4 sort of month range of inventory over the last several months. If we move on for Los Angeles County and we look at closed sales, again, we're seeing a positive trend here. We're up compared to a year ago, 9.4%. And this certainly wouldn't have probably been as strong had rates stayed high or continued upwards. So again, we've seen some help here in the number of closed sales that are taking place out in the market. So as we move into the South Bay and take a look at what's happening with median prices here, what we see is that we are up a modest 2.4% year over year in median prices, just slightly edging out the rate of inflation. So nothing substantial. And this, of course, is in the face of these extremely low mortgage rates as well. So a little bit of growth out there in the market, but not much. Now, if we look at inventory, month supply of inventory in the South Bay, unlike Los Angeles, we still are trending upwards. We are up 14.8% compared to a year earlier. And as you can see, even with the low rates, at the end of 2018, inventory started kind of dropping down, but it's kind of been steadily climbing since then, even with those low rates. So it'll be interesting to see what continues. I don't anticipate mortgage rates going any lower than they're at right now. So we'll have to see what happens to inventory in the coming months. Now, if we take a look at closed sales, again, we're seeing a similar trend, a huge uptick in closed sales compared to a year ago, which makes sense because rates were rising throughout 2018, which was slowing the growth in the market, slowing the number of sales that were taking place. So definitely a more moderate and stable market, we would say, across the board. A lot more opportunity out there for buyers than there was a year ago or a couple years ago, and a little bit harder for sellers to get a property sold. Definitely not as many bidding wars taking place as we would have seen, over the last several years. What I'm seeing out there personally is that in the lower price point markets, they're still extremely competitive. So generally speaking, anything under 5, 6, 700,000. And some markets are still extremely hot, like Hollywood Hills, Echo Park, places like that. But a lot of other traditionally hot markets have cooled off quite a bit. A lot of inventory is sitting and prices are going down in those markets. So it really just depends specifically on what area that you're looking in. But generally across the board, there's a lot more opportunity out there for buyers. It's a little less competitive and definitely a more stable market than we've seen over the last several years. So hope this information was useful. If it was, do me a favor, go ahead and click the like button, click the subscribe button, and look forward to seeing you on next month's video. If I can help with anything real estate related, don't hesitate to reach out to me directly, or you can visit our website, southbayonsale.com.